Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, September 30th, 2020. Thank you for the kind words on the site yesterday. Actually, last night was a little bit better than the night before, and so far today, so good. But I tell you, this COVID thing, I swear, at times you think you're all the way back to normal, and then boom. An hour later, you're sucking down Motrin like it's candy. Anywho, let's get to the charts here. This is NQ, the 60-minute chart NQ. So if we go back to yesterday, let's flip over to yesterday's stock index charts and near-term scenarios. And that had the NQs, the preferred scenario. I'm going to zoom in here. If you have a scroll wheel on your mouse, once you click on a chart, roll that. The chart will zoom in, and then you can drag it around and pan it. So that was the minimum pullback target. The current favored scenario was down to 1128-ish right there, and then followed by another thrust up again. Minimum pullback target. You could have traded that where you trailed stops down. If you did, you would have been taken out because we reversed. Let's get back to the charts now. Of course, you could also cover there. That happened right after the election, or during the debates. I'm sorry. I guess people didn't like the way that was going, and it's often there's some type of news catalyst often that will trigger what's priced into the chart. So that was then yesterday. That's the drop right there. So that's what we had. We hit the minimum pullback target. Slight momentum fueled overshoot. Again, enough time if you were around to cover that reverse, or to trail stops, do whatever you wanted, and pretty impulsive reversal so far. So here's the bottom line: this is bullish price action. It's a correction that was priced into the charts. We had small divergences, and that's what happened. And the buyers have stepped in pretty aggressively. That's over a 2, maybe even a 3% lift so far off those lows last night. Here, I'll try to measure it out for you. About 2.5, a little better than 2.5% so far. Okay, where do we go from here? That's the big question. Something to point out is, this looks like pretty smooth sailing up to that target, but probably should lower that just a hair. We'll leave it there, 11,553. And I want to point something out. As of now, since we're slightly above the that previous reaction high, we have even larger negative divergence. There's a lot of upside momentum. They're buying this aggressively. I'm going to show you some developments on the daily chart that's actually bullish. I'm whipsawing you with these longer-term bearish developments, and then I come into these 60-minute charts, which are clearly bullish, price action divergences. And my job is to report what I see, tell you what I think is going to happen, and if I have a strong opinion or convictions, I'll let you know, and if I don't, then I'll let you know that I don't. Right now, near term, oh, there it is. I moved that line. Didn't mean to do that. Here's what I'm going to do is tell you at this point we have even larger divergence. Now there's a lot of momentum. They stepped in and bought the bought that pullback to where they should have bought it, right back to support. So again, technical analysis is working pretty well right now. But you can see as I extend these divergence lines, we have potential larger divergence. Now, divergence, I always say this, is not a sell signal. So what can happen? We'll just monitor this. If we continue higher, I drew that divergence line up to that target. I'm going to say this, it's a well-watched target. I would be surprised, or I should say I would not be surprised if the sellers step in a little bit early there and get some profit taking. So if you were long, if you bought the pullback, if you bought the divergent low, anywhere in between, and you're riding up here to 11,547, and you're an active trader, well, you can either take profits a little bit shy there, because I'd put pretty good odds on a reaction, meaning a pullback or a consolidation, or you can just tighten stops up and let it run. That's one strategy. When you're swing trading, as the trend goes in your favor, periodically raise your stops and let it run. All right, but if we get there, again, we're going to have even larger divergence. This little divergence played out for a little correction. Bigger divergence should it materialize or get confirmed. What I mean by that? Well, the PPO is a momentum indicator. Right now it crossed over. The orange line, the PPO line, is pointed nearly straight up. that's upside momentum. It can go up, 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 up. If it passes this point, you no longer have negative divergence. So it needs to go up. Then you need to get, it would mesh with a reversal at or around, maybe even a momentum fueled overshoot above it. Hard to say. All I can tell you is I think that's pretty well watched resistance. I think traders will be looking at that. And then if we roll over there, we could put in a pretty large divergence, which could lead to an even deeper correction. Again, should it be confirmed, and should we get rejection on or around that level? All right, let's show you QQQ. Let's look at that real quick on the 60-minute chart. Zoom in a little tighter. There was our breakdown yesterday, sell signal. See the Qs again. You don't see that move last night because it occurred after hours. So QQQ would have been something similar to what happened in NQs last night if they were trading around the clock. It probably would have come in and backfilled that gap right there, which was, I believe, my minimum pullback target on the Qs, if I'm not mistaken, as well. And that's also the top of this W bottoming pattern here, right there. There's a big, almost perfectly symmetrical W. We broke out of it. And again, this is all nothing but bullish. As I said recently, I see nothing but bullish price action here. The dips are getting bought up pretty quickly. The PPO, remember I told you yesterday we had a potential crossover if we had any more downside. Well, look what happened. We didn't. Let's zoom in real tight here. Spin these lines, it kissed. And that's what not often, but it does happen. You watch these lines, the signal line will act as support or resistance. Sometimes a bearish crossover looks imminent. And this is, I know the video, it's probably hard to see. I don't have these lines very bright. Here's your PPO line. This white line here is a signal line. And PPO looked poised across, and boom, it kissed it perfectly and bounced. So as of now, that keeps that that one trend indicator. You can use it that way. When the PPO line is above the signal line, the trend is bullish. It keeps that intact. But again, you're coming up on some pretty decent resistance. There it is, 282.32 on the Qs is where I had that level, and we just hit a high of 279.98. Okay, close enough. Again, where you might want to start either taking profits a little shy of that level or tightening up stops. I know right now it's nothing but bullish so far today, but again, I think there's a good chance we get a reaction off that level. And we came close enough to consider it hit, even though we're a little shy of it. So we can go up a little more, or maybe we've seen the highs for today already. Excuse me, I meant to pause the video. I usually pause when I cough and thought I hit the pause button. There's a SPY right there. Took out that 335.12, so that's his near-term bullish right there for SPY. Remember, that was resistance highlighted the other day, as well as a 38.2% Fibonacci retracement. So we stalled at that level, reversed off it, and then broke the trend line support, came down, hit that minimum target right there, that pullback target of 331-ish, 331.18, and now we powered up and we broke out there. So whereas I have QQQ at resistance, I don't have much on the way of resistance on SPY until about 340, maybe a little below that. Actually, more accurately, I want to highlight this gap in there. And so, but there's a little upside left on SPY. But again, to me, it's mostly about Qs. Everybody's trading and watching, and they love those FANG stocks. They love Apple, Microsoft, Alphabet, even the other ones in QQQ like Tesla, Nvidia. Those are the big components there. So that's it. Near term, I think most of the juice has been made for the day, is what I was trying to get at earlier. Alrighty, next up. I'll hit on crude, although I'm not going to spend a lot of time because I told you yesterday I don't really have, I did, say that we broke this symmetrical triangle, that would give you the next tradable trend. We got it quick. We broke it with the downside, but as I said, I still don't have a lot of support or resistance levels to jump out. So crude was in no man's land, and it's having a snapback rally today. That's helping the coal stocks, energy, things like that. Oh, I know what I want to show you: natural gas. So again, I'm staying away from that one. I just wanted to kind of point out what's going on, that we have a nice lift. Got kind of oversold yesterday, and then nat gas. It still has that potential Remember, it was a potential inverse head and shoulders pattern, which was foiled. The pattern never materialized, meaning we never put in a right shoulder, so that's a no-go. But what we did do with that thrust down, as I mentioned, we extended the divergence. We're so far, as I said, what you'd want to see is a successful defense and reversal off that previous reaction low, that support zone I gave you right there, and you can see that's what we did. So there's a it's still aggressive. They got a pretty hard smack down in nat gas yesterday, but it fell to support, and now where it had some bullish divergences before, when I pointed out divergent low right there, it has much larger divergences now. And so while I can't promise like any trade that's going to pan out, I can promise you it's objective, a little bit aggressive, but step in at that support zone if you did or didn't already. We're not too far above it. You could still step in, but that's, in fact, I like it better the fact it's reversed. So I will say this is, the preferable entry right here. It's reversed off there, and you could have your stops a little bit below there. And then what we'll look for here is if it can rally from here. You have trend line resistance and then 2708 resistance just above it. Might get one more reaction there, but if we can break above that level, that 2708 level, it should open the door for a rally to these potential targets, maybe even more. So that's it. So the risk reward, to try to quantify it from where we're at now, if you give yourself, say, a 6% stop, you're shooting for about 25% profit, maybe even more, if nat gas can get a nice run going. And again, for those of you that don't trade futures, UNG is one of the more liquid, non-leveraged. The leveraged ones either blew up or went away. Something happened, I think, with those 3-time leveraged nat gas ETNs, and you really don't need that leverage. If you want leverage, use the futures. NG, QI, QG is a smaller, the mini contract. What do we have here? Well, we have RSI divergence. I'm going to draw it out for you right here. There's a positive divergence on the RSI, and we're holding that support. 1127 is a line I've had on this chart for a while for these previous reactions right here. There's a gap right there, reaction high, gap. Another reaction there, and so just like nat gas, it's fallen to support. So a case can be made for an objective long entry with a stop somewhat below those recent lows and swing it on up here. Minimum, again, you want to trade, even if you're trading the ETN, I'd suggest keeping an eye on the futures. If you don't have a futures account or futures charts through your broker, investing.com will give you free real-time charts and quotes on all these commodities in the futures accounts that I talk about here, including natural gas. So that would be a potential target there. But again, a lot of the times natural gas will hit a price target or a resistance level outside of regular trading hours, because like most futures, it's trading almost around the clock. So there's your potential targets, and also potential longer-term bullish setup with this, what I just drew here, bullish falling wedge pattern. So there's a lot of potential if we can finalize this. It'd be better if we could, there's actually divergence. It's about equal lows on the PPO right there. You only have to have, if you're making lower lows in prices, you don't have to have higher lows on the indicators. You can have equal or higher lows. So that is positive divergence across the board. Okay, moving on. Gold, silver, we did get that pullback. Still very close to those first targets, but the dollar and the euro did have that reaction where I suspected they would yesterday. It did play out into last night, as talked about in yesterday's video. Gold pullback was minor; it was less than 2%, I believe, and then silver was over 3%. Silver is you're gonna get more bang for your buck. Trading silver, it's more volatile. There was about it was over 3.5% pullback we got out of silver, and again the catalyst was the euro and the dollar. Euro had hit the top of my minimum or first bounce target zone. That's where I covered the video yesterday, saying I still favored at least a little pullback, even if we're going higher, which I'm leaning towards. And there's that little pullback. Whether that's it, all of it or not, hard to say. But remember, we're coming off a divergent low. This is bullish here, and so a little zigzag. And as I said before, if you're not a very active trader, you don't worry about these little zigs and zags, try to game them all the way. Active traders could have, flipped out of silver, saved, if you averted that 3.5% pullback, or you acted on it, that's 7% you put in your pocket on top of the long that you already had in the long position, because you got out of the long, saved the 3.5%, get back in profits, and you profit by shorting silver. But again, yeah, that would have entailed nailing the lows, which is hard to predict. But you can see actually the pullback, if you were using the futures, I'm going to put a line there. There's some reactions right there, quite a few reactions on this line, and that's about where we pulled back to right there. And all right, so let me look at the dollar real quick and we'll move on. DX, where are you? DX dollar futures. This one I need to refresh. That's it. And we hit the top of my minimum target pullback zone, 98 or 93,862. There's your bounce in the dollar, and that was what caused the pullback in gold and silver last night. Where do we go from here? Remember, we put in pretty decent divergences right there, but we're also coming off this bigger divergent low. I don't know, equal odds. If we go back down here, maybe we hit the bottom, that next support, or the bottom of the support zone around 93, 636, or maybe that's it. I don't know. I still favor this scenario, leaning towards that. That's another leg up in the dollar, which would put additional pressure on gold and silver if that happens. Last but not least, coffee has been, at least for last, since Friday, I guess, my, top pick in the, ag commodities. KC coffee futures, again, we came full circle, big uptrend line. We caught most of that by trading coffee long. That rally ended with a nice big bearish rising wedge. There was a sell signal if you didn't get out when the third target was hit, which was almost right there, that maximum T3 potential target on JO, the coffee tin. That was your sell signal, and last chance to get out, have a stop below the trend line if you were holding out for additional gains. And then we came full circle by setting up a nice drop into support, well-defined support, 10860, very well-defined, lots of reactions on coffee there. Hit it once, bounced after we broke out of the bullish falling wedge, hit it again, and this was another objective long entry on that pullback to the 10860 support. Still not. It still needs to take out those previous reaction, that previous reaction high, and that would be the first target at this point, 114.94-ish. Actual resistance level, not an adjusted price target. And then I did add some additional levels here for those of you trading coffee futures. There's your divergences. So really this slight marginal new low that we have here, all it did is extend the divergences that were in place when the wedge broke out. So we put in an even larger divergent low on this recent marginal new low there. And JO, the coffee ETN, excuse me, 60-minute chart. Right there's your positive bullish divergence, and again, you're not seeing the support here as well. This is an ETN, does a good job, but it's not perfect, of tracking the futures. That's how they attempt to track coffee prices. That's it. So these are old levels. I don't think I've changed these in a while, but they still look to be valid. You can just take a look at those targets. Something more of a just let it run for now kind of thing. If it stop below the recent lows, it either pans out or doesn't, and we could easily take out the previous highs and maybe get the next major leg up. The commodities have been firming up for months now. I've been bullish on the ag commodities, and then that ebbs and flows. We hit a lot of them, like coffee, hit the final price target, set up those divergences, and so you're going to have corrections in bull markets, and that's what we've had. So just like coal stocks and other things I've been trading, get in when you start, after 20, 30, 40% gains, price targets are being hit, some of your longer term targets, negative divergences are setting up on the chart, overbought conditions. That's where you step out of the trade. I call it micromanaging. Even an investment or long-term trend trade, I don't see a reason personally for riding out a in coffee I didn't mean to put that PPO histogram there. I wanted the PPO itself, if I can find it. There it is. On coffee, turn on the lines. I don't see the point in riding out a 20% give back in profits, even if I was positioned, even if I believe coffee was going much higher in the coming year or plus. So that's where I'll use the charts to kind of tactically or strategically manage longer term trades and positions. So that's it. We'll end it here. Get the video out to you guys, and if I see anything else that stands out, I'll let you know. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.